All right, let's tackle a big one. It's a question we hear all the time. And on the surface, it sounds so simple, right? Is life insurance taxable? This is what pretty much everyone thinks. It's probably a huge reason why people get life insurance in the first place. You want to leave something behind for your family, tax-free. And hey, for the most part, you're not wrong. That's usually the case.
But, and you knew there was a but coming, didn't you? It's not always the whole story. The reality is, things can get a little tricky. And if you don't know the details, you or your family could be in for a nasty surprise come tax time. So today, let's clear up all that confusion.
Okay, first things first, let's talk about the good stuff. We're going to cover all the common situations where life insurance does exactly what you expect it to do, which is be tax-free and provide that financial safety net you planned on.
So, the big one, the main event, the death benefit. The money that goes to your loved ones when you pass away, that is generally 100% income tax-free. That's the headline for sure. But wait, there's more. You can also usually take out loans against your cash value, tax-free. If you're terminally ill, you can often get those benefits early, also tax-free. Even dividends are typically just seen as a return of what you paid in, so no tax. And you can even pull money out up to the amount you've paid in premiums. Again, tax-free. It's this flexibility that really makes life insurance such a powerful tool.
All right, so we've covered the good news. Now for the really important part, where things can get, well, complicated. There are these little tripwires, these hidden tax traps that can turn that tax-free benefit into something taxable. And you definitely want to know what those are.
Just think of it like a fork in the road. Path 1 is the death benefit that goes to your family. Like we said, that's usually the tax-free path. But then there's Path 2. You decide to surrender the policy. Maybe you just want to cancel it and take the cash. Well, if your policy has grown in value, any amount you take out that's above what you paid in, that gain is considered taxable income. Let's put some real numbers on that to make it super clear. Imagine you've paid $40,000 in premiums over the years, but the policy's cash value is now worth $60,000. If you surrender it, that extra $20,000, the growth, is what you're going to pay income tax on. It's a classic situation. The growth was tax deferred, but once you cash out, it becomes taxable. Okay, I'm about to throw a piece of insurance jargon at you, but stick with me because it is super important. It's called a MEC. That stands for Modified Endowment Contract. Basically, this happens if you dump too much money into your policy too fast. The IRS looks at it and says, hold on, this looks less like life insurance and more like a tax-sheltered investment. And boom, the tax rules change. All those tax-free loans and withdrawals we were just celebrating, they can suddenly become taxable. It's a really, really critical line you don't want to accidentally cross. And there are a few other little things to watch out for. For example, if you have a loan out against your policy and you let the policy lapse, that loan amount can suddenly become taxable income. Ouch! Or if there's a delay in paying out the death benefit and the insurance company adds interest, yep, that interest is taxable. Even your free life insurance from work, if your coverage is over 50 grand, there might be a small tax implication there too. But honestly, the biggest, scariest, most expensive trap of all, it's not even about income tax. It's about estate tax. Here's the deal. If you personally own your life insurance policy when you pass away, the entire death benefit can get counted as part of your estate. And for larger estates, that could trigger a federal estate tax of up to, get this, 40%. That is a huge chunk of money you meant for your family that could end up going straight to the IRS, all because of a simple ownership mistake. Okay, I know that last part sounded pretty scary, but here's the really good news. All of these traps are almost completely avoidable. You just need a little bit of smart planning. So let's switch gears and talk about what you can actually do to protect your policy and your legacy. Job number 1, especially to dodge that massive 40% estate tax, is getting the ownership right. A common strategy is to use something called an ILIT, an irrevocable life insurance trust. Just think of it like a protective box you put the policy in. When you do that, or have someone else, like an adult child, own the policy, it's no longer part of your taxable estate. It's an absolute game changer. After that, it's really about being proactive, working with an advisor to make sure you don't accidentally create one of those MECs, and then just checking in on your policy every few years to make sure it's still doing what you need it to. So you might be thinking, okay, does this really apply to me? Do I need to worry about all this? Well, while good planning is smart for everyone, there are definitely some people who need to pay extra close attention. Let's see if you're on this list.
For starters, if your family has a high net worth, this kind of planning isn't just a good idea, it is absolutely essential.
The same goes for retirees who are planning on using that policy's cash value for income. Business owners, you definitely need to be on top of this for things like succession planning. And hey, even if you're just thinking about gifting a policy or paying the premiums for someone else, you need to be aware of the rules there too.
Look, I get it. This stuff can feel pretty complex, but the great news is you don't have to figure it all out by yourself. Here at The Annuity Expert, this is what we do. Our licensed professionals specialize in this stuff, helping people with life insurance and estate planning every single day. And the best part, our services and consultations are completely free.
So that really brings us to the final question. Are you ready to make sure your life insurance works exactly the way you intended, protecting your legacy for the people you care about most? If the answer is yes, just reach out. Give us a call or visit our website. We are here to help you get the answers and the plan you need. Thanks for watching.